Hi, it's Anthony here. I hope you're having a great day wherever you are in the world. In this video, we're going to take a look at the World Economic Forum, and I'll give you my take. And also, just to let you know that this is the real me here. I'm not doing any kind of AI-generated avatar or anything like that. And that'll always be the case with my videos. Okay, what happened at the World Economic Forum? You know, if you take one thing away from this week, it's this chart right here on the right-hand side of the screen. We're currently witnessing a decoupling, a massive decoupling. While stocks, represented by the black line, have been volatile, look at the gold bars. This is a structural repricing. What happened at the World Economic Forum 2026 wasn't just talk. It marked the official pivot from globalization to resource nationalism. We saw a V-shaped reaction in the markets, panic selling on the headlines, followed by a relief rally. But don't let any stock recovery fool you. The political risk premium is back, and the era of blindly buying the dip is well and truly over. So what triggered the sell-off? It wasn't earnings. It was geography. Look at this map. The US is making a strategic play for Greenland, specifically to secure rare earth elements for the defense and AI supply chains. When that interest met resistance, we saw the weaponization of tariffs, threats of 10 to 25% on NATO allies. This triggered a sell America trade we rarely see, where both US equities and the dollar fell together. And this isn't just retail panic. A Danish pension fund immediately divested $100 million from US treasuries. Foreign capital is starting to politicize its portfolios. Look at how the volatility played out. You can see the VIX spiked nearly 30%, hitting almost 21 solely on headline risk. This is what we call the Trump call mechanic. The administration generates volatility to gain leverage. That's the spike. And then dampens it with a no-force speech, which you see right here where the VIX collapsed back down. The tail risk was removed, acting as a circuit breaker for the market. But understand the new regime. Traders are now forced to pay a premium for protection leading up to deadline dates. This political friction is creating a massive divergence in the stock market. We call it the America First split. Look at the losers first. Netflix dropped over 2%. Why? Because the market is punishing consumer brands that rely on global subscribers and are exposed to retaliatory tariffs. Now look at the winners. Intel's up 10%. Energy is up over 2%. The rule of thumb right now is simple. If a company powers the grid or builds a missile, it outperforms. If it sells subscriptions overseas, it got hit. While stocks bounced back, gold told the real story. It hit a record high of over $4,800. This isn't about inflation anymore. It's about regime change. Central banks are aggressively accumulating gold to hedge against asset seizures and the weaponization of the dollar. As we move into this blue sky territory with a target of $5,000, gold is being priced as the ultimate sovereign asset, the only thing that can't be tariffed. In the currency markets, the US dollar, shown here by the DXY, stabilized at roughly 98.8. It's essentially the cleanest dirty shirt in the laundry basket because Europe offers no credible alternative right now. But the real risk is on the right side of this chart. Look at the Japanese government bond yields. They are spiking to record highs. This threatens to unwind the massive carry trade, which could force a liquidity shock in US treasuries. keep a really close eye on Tokyo. That's where the next volatility event starts. So we're going to have a look at the week ahead. Looking ahead, we're navigating data versus deadlines. In the next few days, we get Core PCE inflation data. If that comes in hot, above the 2.6% expectation, it destroys the soft landing narrative. But the big circle on your calendar needs to be February the 1st. This is the deadline for the 10% tariffs on allies. We also have a Supreme Court case pending regarding Fed independence. If the market sniffs out a thread to the Fed's autonomy, bond premiums will spike immediately. Okay, so the question is, how do we position for this? First, we are overweight on energy and defense. We're buyers of domestic hardware like Intel, plays on industrial sovereignty. And regarding gold, buy the dips. The structural drivers are too strong to ignore. I've been doing regular videos on what I'm calling the gold monster trade. I'll put a link to the last video in the description. Definitely check it out, the gold monster trade. And on the flip side, avoid euro exposed consumer discretionary stocks. In my opinion, they are dead money until we get clarity on tariffs. The bottom line is this: the market survived Davos, or Davos, whatever you want to call it. But the tectonic plates have shifted. We aren't trading earnings anymore. We're now trading geopolitics. Stay nimble. And I always keep coming back to gold. Okay, check out my monster trade video. It's a game changer. And on that note, I hope you have a fantastic day. See you in the next one.